So we have Rajesh Palvia, Head of Technical and Derivative, to talk on. Okay, Manisha, we have Sandeep Agrawal.
Yes, so let's take it forward and bring Sandeep Agrawal on the phone to talk to us about the numbers. Sandeep, I think we just had the initial numbers coming in. 12,300 odd crores on the bottom line, 61,200 on the top line. Don't have too much details to give to you at the moment, but with these first numbers, what will be your initial sense?
No, it is, I would like to still see little bit number on the dollar side. I don't think they have yet come. So, looks very difficult to comment. But, what was the revenue number you have told? It has come?
130, that's the first number that I have as far as the rupee revenue is concerned. And dollar revenue, I'm just trying to open, but why don't you begin with the rupee revenue first?
No, I have not yet the rupee revenue.
61,237. 61,237. Okay, let me just fill you in with a few more details since I have the number. The FY24 order book now stands at $42.7 billion. The Q4 TCV was a solid $13.2 billion. So that's a very strong number coming in. The operating margin is a tad bit lower, 24.6%, because we were working with a number of around 25%. That seems to have ebbed off a bit. Growth has been led by India, which was high by around 38%. UK stood out quite well. And take a look at the constant currency number. On a year-on-year basis, it seems like it's 2.2%, because they haven't mentioned whether it's quarter year-on-year, but looks like the number which stands out is 2.2% on a year-on-year basis. And the revenue has come in at $7.36 billion, which means around $7,300 million. Would you say it's a beat?
I think revenue number in line, but the order book number is very substantially good. And even the margins, I am not negatively surprised because, they vary 20, 30 bits, and I don't think it is, varying more than 20, 30 bits versus the estimate. So I wouldn't read much in the margin numbers, but I would rather say that the order book number is the one to look. As said in the earlier interview also the day, that this is the quarter when you should look at the guidance and the order book, because now things will open up for the current year, as last few quarters have been little challenging, but the outlook, as the companies mentioned earlier, also looks more interesting and exciting.
Yeah, just stand correct on the margin figure, because the operating margin has come in at 26%. The earlier margin of 24.6% is perhaps the full year number that the company has given. So all in all, it's a beat on the top line, largely because the dollar revenue has been good. The margin are actually a big surprise, 26%. Nobody on the street was expecting a 26-digit number. Everybody was between 25 to 25.3%. And the TCV number of $13.2 billion is pretty much out of the park, because people were expecting maybe $7 to $9 billion led by the Aviva. This is much stronger than that. And even if you look at the bottom line figure, it's managed to beat the expectations as well. In terms of the verticals, it seems like it's energy which has done well. And overall, in terms of the other details as well, which is coming in terms of the commentary, K. Krithivasan says that we ended the FY24 year on a strong note. The operating margin is strong, and we are staying close to the customers and helping them execute to their core priorities. Even N. Ganpati is talking about similar lines coming in with the stellar growth that they have reported this quarter. Sameer is quite excited about the long-term investment that they've made in workforce reskilling as well. But talking about the certain sectors, BFSI has managed to degrow yet again, Sandeep. BFSI is down 1%, while manufacturing again has stood out with a 7% gain. When do you see BFSI to bottom out?
So I think, BFSI will take some time, still one or more quarter before, it starts showing some growth, because you have agree to the point that BFSI is directly related to the fear of recession. So, the discretionary spends are still on hold by many of the clients. But I think the way manufacturing is doing and the way order book they have reported the order book and the operating margin and the valuations are not very high. I think it is a very good set of number, and commentary honestly is very good. And also, if you see this industry is about quarter-on-quarter billing, so from that perspective, at the level at which they have exited the quarter in terms of margins and in terms of order book, I think definitely numbers will be much better going ahead for in the coming quarters. And also remember that all the Nasdaq stocks have done extremely well, and we always get a benefit of orders from them with a lag effect. So I think future looks much brighter, and I think the worst of the pain is behind for the large cap names. That is the way I would like.
Much of the pain is out. Mayuresh Joshi is also joining us. Mayuresh, do you think this kind of numbers warrant for a re-rating on the stock? I mean, a stellar number coming in on the margin, quite a bit of beat in terms of the deal wins as well.
Oh, absolutely, Anisha. I think fabulous set of numbers, and therefore I think the revenue growth, though much better than expectations. I think what has really bad has been the margin performance. So I think nobody on the street was of the opinion that margins will be at 26 odd percent, and they've actually delivered that with a very very strong Q4 TCV at $13.5 billion. I think the best part about the number also is that from a geographical perspective. UK 10% up, regional markets up 9.6%, and LATAM markets are also significantly higher on a year-on-year basis in dollar terms. US is the only market which is probably lagging. And as I said in the afternoon show that I did with you as well, I think it will take a couple of quarters as discretionary spending patterns come back on track. And as that happens, the second half of this year will be significantly better for BFSI as a whole. And that implements the kind of growth that you probably seen in energy, kind of growth that you probably seen in manufacturing, as well as life sciences and healthcare. So I think fabulous set of numbers. Yes, valuations are a bit on the higher side, but I think with these numbers, I think the stock should get re-rated. It is trading above key pivot levels as we see it at MSI. I think the stock will have a very, very strong show in Monday's trade, and it will take the IT sector with the expectations that the others might also deliver. Not a good set of numbers, at least a decent set as numbers coming through for Q4.
Okay, so the TCS wave will carry with it the rest of the IT peers as well. But that's the next question to you, Sandeep. Which is the next IT company that can perhaps surprise us on the upside with the kind of numbers that TCS has delivered now?
So, if you see last 30-year data, I will again and again reiterate the same thing, that in last 30 years, always we have done extremely well or bad on either side with a 6 months lag versus the, NASDAQ big techs. And this time also, if you see last year, despite all the fear of recession, hard landing and everything, most of the stock in NASDAQ, even the large names, are up from 60% to 300%. So there is no reason for us not to do well. So we will definitely do much better, and our large cap names honestly have only moved up to the extent the earnings have moved up. So there is a real re-rating of 5-10% which should be there, plus additionally earnings surplus. In case of mid cap, I think we are fairly priced on the multiple side. If there is a surprise, they could still do better. But I would say that there is a wave of technology which is again coming, like it happened in 2021. If you remember, in January, all the management were busy in putting the numbers and guidance, and in March, everyone has to come and increase the guidance. Same thing you will see this year, when in January, February, everyone was very dovish. Now you will start listening to very good commentary in month of April. I very positively, I have very positive view that all these names will do extremely well going forward, and next 6 months you will see good action in the sector. Yes, one or two company may not show good numbers, but the commentary will be very good.
Very good. That's the take coming in. Quick, taking it across to Omkar Tanskali, who's joining us on the show as well. Omkar, both other experts believe that the stock is likely to open strong, very strong perhaps on Monday, and there could be a further re-rating. Is that what you're planning to do for estimates?
Yeah, I mean, definitely it looks to be strong, and in terms of execution capabilities that TCS has always been, showing off. That's why they are also demanding the in terms of valuations. I believe it's more of, sorting out the clients and your engagement with the clients, and how do you, ramping up the deals in the challenging times. So that decides your services part, and TCS is doing good. So I always been optimistic about the technology driven and TCS to be very specifically. And in terms of the demand scenario, I believe it's the deal pipeline has already been shown that is it still demand? Yes, definitely uncertainties, lagging the growth drivers on the laggard part. In gradually, it will definitely will likely to cope up. Still, it's being very it is very important to watch out for the vertical commentary and outlook.
Point taken. So that's the take coming in. With that, we'll let you guys go. Sandeep, Omkar, as well as Mayuresh, thanks so much for joining us. But if you're joining us late, TCS has kickstarted the earnings season on a very positive note. Yes, the revenue was pretty in line with expectation, but there's a big beat coming in on the margin front at 26% versus street expectation of 25.2%, resulting in a beat on the bottom line as well above the 12,000 crore mark. Beg your pardon. Attrition has cooled off further. 12.5% is what it stands at versus 13% that it was last quarter. The other big surprise has come in terms of the deal wins, which stand at $13.2 billion. That compares with the street expectation of $7 to $9 billion. So strong showing coming from TCS, and the experts saying that on Monday the stock is likely to open in the green. With that,
if you like this video, then like, share and subscribe to ET Now.